Hello and welcome to Macro Monday, powered by the Gokhstein News Network. I am your host, Landy. Today is August 4th, 2025, and we're looking at Bitcoin as always. But this was actually a little bit of a farce. We're going to look at something else pretty interesting today, and that's going to be Rick. We're going to look at Rick. Let's go see how Rick is doing. And if you're not sure what Rick is, this is RCI Hospitality Holdings, Inc. And Rick owns and operates a lot of gentlemen's clubs and bars. And I want to show something pretty interesting because it's come up over the past, Friday and then a little bit over the weekend. And I thought it was pretty funny because there's two indexes for discretionary spending that are really, really accurate to kind of get a feel for where people are. And forgive the little bit of misalignment over here on the right. That'll be fixed when I go back to the Bitcoin chart. But you can see back here, this is the weekly for RCI Hospitality Holdings, otherwise known as a good vector for the stripper index. It's become quite a popular, much like the Rolex index, become a popular metric for people to reference. So I thought it'd be fun to actually take a look at it this fine Monday evening. And we can see that back here in 18, we had a bit of a downturn coming into 2020, right? And from 2019, we saw the highs. We saw the same thing going on in markets in general. And then we hit the lows, of course, in 2020, and then lift off 2020 into 2021. And of course, we saw the peak kind of come in around the 21 coming into 22. It did get a little bit of a rebound before heading down. Now, we also saw traditional markets kind of chopping around highs as well, and then it's been down ever since. And, this is because a lot of people don't have a lot of discretionary spending. A lot of that spending is moving over to staples, right? And not discretionary spending. We have another chart here, and this is called the Rolex index. And I wanted to point out, a lot of people are looking at really low term timeframes on the Rolex index. But if you go and you take a look at the 5-year here, you'll see that we saw the peak for secondary sales of Rolex watches here, peaking out in right around 21 coming into 2022 before the bear market hit, and we have yet to come out. And that has been born through all of the different economic data that we've looked at as well, and for the past couple of years, right? While things are improving, they're improving relatively, and we still haven't seen a lot of relief in the economies for the regular everyday person. We are starting to see a little bit of that shift here in the United States, but it's only just beginning, so the data is still kind of mixed. And then we get shocks to the system, like revisions of data for the amount of new hires, right? And that's in the BLS data for non-farm payroll. And we've seen that, some can maybe think like, are the books being cooked to keep rates up? There is some speculation there. I've even floated that myself when looking at some of the data as it relates to some of the other data that we have access to, which is ISM data. I've kind of looked at BLS like, this seems like you're kind of cooking books. And we saw this really starting around May of last year. So May of 2024 is really when things they weren't lining up anymore. And some would argue that it maybe started a little bit earlier than that, where things just didn't quite match. But the data was kind enough that the Fed decided to cut pretty close to the election. And now we're on the other side of this, where we have data that's being revised down pretty severely in large chunks. And that's not a good indication of honestly collecting that data in an honest and open manner. So we do look forward to catching up with some PMI services data from ISM that will be coming in on the Tuesday session, which is currently open. Let's go to the daily for Bitcoin real quick here, and let's get right into it. We did get the strike rate there down to 112. And that was the key area that we were looking for, 112 to 119. For Bitcoin, we got a nice, beautiful, you don't get much better than this, by the way, a beautiful tap on 112, which of course was the prior all-time high over here, right? 112 even here on spot. We got a beautiful tap on it on Saturday, and then a nice little wick right down below it. And then we came right back up to retest the breakdown area. Now, I had mentioned this before, and at the time that, last week, I believe it was Wednesday. Was this Wednesday? Is this the Wednesday candle? Yes. So Wednesday, when the Thursday session opened, I'd called out the 115,700. We saw the close open on that coming into the Friday session. And then the Friday session head down, right? So the next big area of interest was the 112. We've now seen that get hit. And if I had made a video over the weekend, what I would have said is, after seeing this kind of play out on the actual prior all-time high area at 112, would be a retest of the 114,750. Got a beautiful retest of that, and then up to the next area, and that is the bottom side of our primary range up here. Now, some are going to have 115.7 like me. If you're following the bear candle wick low over here, that solidified the swing high. Now, of course, we did get closing higher highs up here in the zone, but this was the zone to beat, right? And we saw quite a bit of volume coming in on both the high and the low of that candle, which kind of defined the range lows here. And this is the area that needs to be recovered. But bulls aren't out of the woods here. Bears are still in control, in my opinion, on any kind of closes. Really, below 118, things can start to shift in the bulls' favor, but the bears can defend all the way up to our 120 to 121 area. You'll see that we have the upper first kind of right there around 119. Some people are going to have points of control like at 117, 118, or somewhere in between here, depending on which chart they're looking at. And realistically, I'd say if the bulls can actually get a close above 118, especially on a daily, we're probably looking for price to head back up to around 120 to 121. And then above there, of course, we'd be looking for 123 to 125, 125 to 128 by the 1414 macro fib. That's both from the prior cycle high to low on fib extensions at a 1414 to 128, and also a local from the prior monthly higher high to higher low on fib extensions will line up at $128,000 to $130,000. And for where Bitcoin is trading right now, though, it's essentially stuck between around, you can call it 116 to 112. And if we do see 112 dropped here, just be aware the zone of interest, while there is daily areas of interest along the way, the zone of interest for the weekly is that 112 to the closing high there at 109. Anywhere below there, we're right back to where this move originated, right around the 108 region on the close open higher low over here, where we did get some swings. And that's kind of, if price starts to fall below 109, this is the next area. But if the bears breach this area, they're going to take complete control of price action in this area yet again, and they have all the cover from the short side up here. So just be aware of that, and they could round price significantly lower. So the bulls really want to see, like 112 starting to, hold on a close, swings down to like 110 in here on the daily, 110, 500, and so on and so forth is fine. But realistically, bulls want to see consistent closes above 112, even if we do get some wick fishing down here. Otherwise, I think, starting to close in there, then I think the bears might try to make it their home for a little bit around the 110 to 109 region and go for that 108, and specifically that low break at 107,270. And many of you that have been watching this particular programming every Monday, Wednesday, and Friday are very familiar with that area that I talked about for quite a few days after the low is set in. And, there's still, as bearish as that might seem, let's go ahead and zoom out real quick after a few quick checks here. One of the big things that could begin to shift if the bulls can hold price here above around that 112 region is the consistent closes. Now, you'll see that the pivot here for momentum is 114, but the longer that the bulls can hold closes above 112, the pivot will become the actual low at 112. So that's one of the reasons why I'm saying that. So I'm giving you a little bit of inside knowledge about how some of these indicators work in this case. So that is something just to be aware of. We could potentially get a momentum shift, of course, above the 114, but in terms of trend, that doesn't mean much, because the last high that needs to be beat in order to change trend, or to break back into the trend up here, would be all the way there at 119,840. So essentially $120,000 is the high to beat, which, unless the bulls can pick themselves up above the 118 region specifically, which is right here in the tighter range, above this yellow zone. I'm not looking for that to be the most likely outcome. Of course, being in the bearish half of the bands isn't great, which is right at 117. Now, this is also where you're going to find a lot of people have a pivot right around 117. It's because it's right around where the lows were coming in. A lot of volume, a lot of swings down here. For me, it's the entire zone. I need to see 118 beat. That's the condition to go and start testing, 119, 120, and then above to 121. And that specifically, we need to see break in order to get an all-time high run, 123 to 125. Initially, 125 to 128, 128 to 130 being some of the key areas above there. Let's go ahead and turn this off here for the local support and resistance zones of interest. We do also have a weekly closing high in. And of course, it's a higher high. And we have a few things to be aware of here. Bulls on the weekly need to hold 101, which is one of the very key levels that we had over here. 101 was one of the, it's a close open over here, but it's a daily spike high. And specifically closing anywhere below 101 is going to endanger this, and of course would break trend on a close, but more importantly, it would give the bears the opportunity to go for 98,225 for a full trend break. But this is an uptrend right now, and we saw that with the close below 114,750 here, that we now have a higher high in place. And you can see that it perfectly tagged our bands. You might remember we talked about $123,000 because that was the band position at the time. And of course, we're still, we're still holding pretty well and true to the band structure, especially when it is open like this. One of the key things here is we don't want to see closes below this upper first. We would prefer, if we're bullish, to see closes above the upper first by the end of the week. That's at 115,200, and you can call it 115. Excuse me, sorry. You can call it 115 even on certain charts, but that would give the bulls the opportunity to play up into the volatility zone that encompasses right around that $128,000 level. Now, of course, again, that's the 1414 where we have confluence between the macro from last cycle high to the bear market low, and then also the local, which is the last higher high to higher low. Where are we? So we're on the weekly. That would have been, no, that was this over here. It would have been 108. The 109,360 to the 74,420.69. So let me just pull it. I said it. The macro one's going to line up here, and this one has some other areas of interest. So you see that's where the upper second's coming in, right there at 128. And then, of course, anywhere above there, I'm looking to essentially the 1618 up here at 138 to 140 by the upper third. And then above there, we can start looking 148 to 150, right? Like 1786 is right around 147,991.21, which is essentially 148 to 150. Just about $10,000 chunks when looking at a fib from that level. And I just made every single Elliott Wave specialist absolutely sick to their stomach. You're welcome. Sorry. But my system does work for me. And I know that many of your systems work very well for you. And that's why we have confluence. But they just get angry with me about the way in which I'm using the Fibonacci. Sorry. For those that are not in the know. But yeah, in this case, we do have the basis band right here about 103. And, the close below kind of puts Bitcoin, especially rejecting around that upper first right now, from a weekly point of view, kind of paints the picture that if we start to see that 112 get cracked, especially on a close, we could start looking towards this basis. But if bulls can defend heavily, this will move up and likely be somewhere around the 108 region, which is right where this move initiated to go up and hit. Right, it initiated from that 108 region. So to hit that 123K. Look, it's not going to be pretty looking at momentum coming in on the high side. This can oscillate around. Look, we've seen it already. It was already turned over here and then came right back up, and it wasn't a strong drive. This is a regular Stoke, so it can stay in the overbought and oversold zones for much longer than something like a Stoke RSI, which is measuring the velocity of RSI. But we have an RSI up here, and we did just narrowly avoid bearish divergence in trend. This is a new trend. So we have a new uptrend. There is no in trend bearish divergence. Yes, I'm aware of all of this. The most powerful is going to be the in trend. And of course, for the daily, I think we actually hit bearish control zones now 110. I want to say on the wick on the daily that was 112, but this updates daily, so it'll have new numbers. Scale midlines right around 115.4. Where is the bullish control zone? Bullish control zone is 120. So yeah, we've got some pretty key areas. 110 being a pretty significant daily, and then we've got 120 being another significant area overhead in the top side of the structure up here. So all of that being said, we should maybe check on Ethereum real quick and then call it a night. Ethereum, I like that the daily closed back in the 36.35. We need to see Ethereum closing above 37.50. Big expansion to contraction coming off the bottom side of the bands. This could bounce around. We want to see this consolidate, and realistically, you want to see Ethereum holding now essentially 33.55. 33.50 maybe on some charts. That's the low that you want to see hold, and even preferably for the bulls, you want to see basically 3,400, 3,392, 3,400 area hold up, because anywhere below the lower second here would be expansion into the low, and likely much lower, come back down to test like around 31, 3,200 over here, and then starting to get in and test 3K. Which endangers, the bulls would be in danger of giving up this zone down here, 2,700 to 2,930. What do we need to see break? Well, you see the upper second standard deviation right there at 3,930, but realistically it says 888 up here, right around $4,000. Just go ahead and you can see the resistance right around and just slightly above 4K, and then of course go for that 4,400. But consolidation is the name of the game. Realistically, you want to see closes back above 37.50 and starting to push 3,800 by the upper first standard deviation to give the bulls a shot back at that 4K region, low 39 to $4,000 region, and then take it one step from there, one step at a time, which would be one step from there anyway. So you have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe, and of course, as always, stay safe. Please share and like and do all the social media stuff with the videos. And I'll be back here on Wednesday. Take care. Landy out.